Thank you very much, all the delegates and the panelists who have joined us today for the fourth edition of CII Real Estate Confluence. A very warm welcome to all of you. Now, I would like to introduce the audience to today's honorable speakers and panelists. So we have Mr. B. Tyagarajan, who is the chairman of the CII Western Region Council and managing director, Blue Star Limited. With 40 years of experience with reputed companies, Mr. Tyagarajan has been handling various assignments in service business, corporate communications and marketing and corporate affairs and planning. He plays a very active role in various industry forum and is the past chairman of CII Maharashtra State Council and past president of Refrigeration of Air Conditioning Manufacturers Association. He is a nominated member of the CII National Council. We also have today with us Mr. Anuj Puri, the chairman of ANAROCK Group and chairman of this fourth edition of CII Real Estate Confluence. Mr. Anuj Puri is the chairman and founder of ANAROCK and has over 30 years of experience in the Indian and global real estate markets. He has been recognized across significant national and global platforms for his contribution to the real estate sector. He has also been associated with various national and international industry forums in various capacities and serves on multiple public and private company boards across different sectors, including India's first REIT and Jagran Prakashan. We are also honored to have Mr. Deepak Parekh with us today, who's the chairman HDFC Limited. Mr. Deepak Parekh spearheads India's premier housing finance company, HDFC Limited, which has turned the dream of owning a home into a reality for millions across the country. Mr. Parekh has been a member of various high-powered economic groups, advisory committees, and task forces, which include infrastructure, housing, financial services, capital markets. He was awarded the Padma Bhushan by Government of India in 2006. We will be also having today a special address by Mr. Rakesh Jhunjhunwala, who is the Chief Executive Officer of Rare Enterprises, an investor with a Midas touch, is often referred to as India's own Warren Buffett. He's a trader and a chartered accountant. Mr. Jhunjhunwala, according to Forbes, a rich list, Mr. Jhunjhunwala is the 40th richest man in the country. He's the chairman of Hangama Media and Aptech and sits on the board of directors of firms such as Viceroy Hotels, Concord Biotech, Provoke India, and Geojit Financial Services. Going forward in the session, we also have the release of consumer survey report and followed by key finding presentation by Mr. Prashant Thakur. So now I would like to welcome Mr. Tyagarajan, Chairman CII Western Region Council, to deliver the welcome address.
Good afternoon. Mr. Deepak Parekh, Chairman, HDFC Limited, Mr. Rakesh Jhunjhunwala, CEO, Rare Enterprises, Mr. Anuj Puri, Chairman, 4th edition of CII Real Estate Conference 2022, and Chairman, ANAROCK Group. Jane and other members from CII Secretariat. I welcome you all to the 4th edition of CII Real Estate Confluence. The theme of the summit is Indian Real Estate, what is staying and what is changing. All the conversations over the next 2 days will focus on the remarkable resilience that the real estate sector has showcased and envision the trends that will drive the boom of the industry in 2022 and beyond. I would like to first thank Mr. Anuj Puri, Chairman, 4th edition, CII Real Estate Conference 2022, and Chairman, ANAROCK Group, for continuing to lead this flagship CII event at such an opportune time. The real estate sector is slowly recovering from the impact of COVID-19, and this conference will work in a great way towards unraveling the multitude of opportunities available for growth. Indian real estate and housing sector plays a vital role in the economic development of the country. It is estimated that the overall employment generation in the economy due to additional investment in the housing and construction sector leads to approximately 8 times the employment through backward and forward linkages. The sector is also among the largest receivers of foreign direct investment while supporting more than 350 industries in the country. It also contributes to the nation's broad infrastructure development, addresses the basic needs of shelter, promotes demand in the plethora of other industries, and is also an avenue for corporate and retail investment. As we know, India continues to be one of the world's fastest growing major economies. As in any growing economy, the Indian real estate sector has been growing in the past decades and is expected to continue on a growth path in the years ahead. Real estate sector in India is expected to reach US $1 trillion in market size by 2030, up from US $200 billion in 2021, and contribute 13% to country's GDP by 2025. While the residential real estate sector has been facing challenges in recent times and expanding conservatively, the commercial real estate sector has been showing good traction, with commercial office stock in India increasing 18% from a year ago to touch almost 50 million square feet in 2021, leading to total office stock supply in the country to cross 773 million square feet. Moreover, riding on the back of expanding e-commerce, the warehousing and logistics sectors have also recorded phenomenal growth over the past few years. The real estate sector is slowly seeing transition towards new trends such as these. Flexible workplaces are the preferred way to adopt the hybrid work model in a post-pandemic world compared to the options like changing existing office layouts or hub and spoke model, which will, among other factors, potentially double the market size of co-working spaces over the next 5 years at a compound annual growth rate of 15%, as revealed by the latest CII ANAROCK report, Workplaces of the Future. As per the report, currently approximately 35 million square feet of flexible office stock is available across the country. The co-working industry is expected to reach a valuation of $2.2 billion by end of 2022, and India's co-working space market is set to pass 50 million square feet in 2023. Further, the affordable housing accounts for a large percentage of residential housing sales and is bound to influence the forthcoming product mix in the real estate sector. Technology innovations will be the key drivers for the success. Today, more and more people are looking for residential properties that are technologically connected and offer sustainable living environment. In accordance with the growing trend of number of real estate developers have started building their residential and commercial projects on the concept of sustainability. This ensures that homeowners will enjoy more green spaces, good quality air, better space for social gatherings, and so on. CII is working in these areas too. The real estate sector has been attracting significant investments recently. Investor-friendly reforms and positive sentiment following India's first real estate investment trust or REIT offering have helped this upward trajectory as investors try to participate in the gains of the commercial real estate sector. Over the last few years, the real estate sector has been seeing rapid growth and development fueled by rapid urbanization and in an increase in the demand for property in Tier 1 and Tier 2 cities. Cities like Mumbai, Bangalore, Chennai, and Hyderabad have become the hub for the realty investment thanks to the rapid influx of IT companies in these cities. CII, through its National Committee on Real Estate and Housing, has been working closely with all the stakeholders and governments, union as well as state, to introduce several reforms with an objective to promote growth and enhance transparency and governance in the sector. Some of the crucial initiatives on which CII has been actively involved with all the relevant stakeholders include Real Estate Regulation and Development Bill, promoting public-private partnership in the affordable housing sector, and the Real Estate Investment Trust, among others. With the strong fundamentals and support from the government, we are confident that the real estate and housing sector will lead the revival of India's growth story during the decade ahead. The government has announced a sharp jump. We are aware of 35.4% in the capital expenditure from rupees 5.54 lakh crore in the current budget. This reform is expected to provide public spending and much needed lead. This is in line with our recommendations as well. The fourth CII Real Estate Conference aims to test the key areas and themes and chart the growth trajectory for the Indian real estate sector in the year 2022 and beyond. During the course of these 2 days, through various panel discussions and special fireside chat sessions, this conference will aim to address the various pressing concerns and growth trends of the real estate sector. And I wish you all the best and hope you all have wonderful days from this fourth CII Real Estate Conference. I once again thank Mr. Deepak Parikh, Chairman HDFC Limited, and Mr. Rakesh Jhunjhunwala, CEO Rare Enterprises, for sparing their time and coming over, and Mr. Anuj Puri for putting this program in an excellent manner. Thank you very much. Over to you, Anuj.
Thank you,
Chairman,
Mr.
sir.
Yeah.
You've covered beautifully, and you've set the tone very nice for day one of the program. We are going to start with the theme address. The topic of this conference is beautiful: Indian real estate, what's going to stay and what's going to change. And we have Mr. Deepak Parikh himself, who's going to be talking about this. And we're going to be joined with Mr. Rakesh Jhunjhunwala shortly. I'll just briefly want to welcome everyone. Delighted that we are launching the fourth year of ANAROCK CII Real Estate Conference. The two successful physical events that we did were really power-packed. Last year, we'd done it virtually. Unfortunately, due to the restrictions this year, we're not able to hold this physically. We're doing this virtually. Today, we've got nearly 45 plus speakers across various cities, including many from overseas, across the panels, including fireside chats. We have over 3,500 registrations, both who are on this Zoom and who are on the YouTube watching this session. So which it would not have been possible to do this physically. So in a way, virtually is better. Really excited with the upcoming sessions, and we'll see how the day progresses. Just to begin with, Albert Einstein had said is that in the midst of every crisis lies a great opportunity. So without a doubt, this pandemic has brought about an unprecedented crisis on mankind and the business. But if you look at the last 2 years, it's also provided lots of opportunities to look at our life and business through a new lens. And one of those lenses has confirmed that India as a country is very, very, very resilient. And it's been now tested. The economic bounce back that we've had is a testimony to these strong fundamentals. I think we're very confident in saying is that India story is surely here to stay. It is going to be an era of multi-year growth. Not only that the GDP is going to grow to whatever 9%, 9.5%, this financial year, but we are seeing booming browses, the stock market. We're seeing very high forex reserves, a huge amount of focus on infrastructure, and hopefully COVID has moved, at least in India, from a pandemic stage to an endemic stage. On the Indian real estate, I'll briefly touch, and Mr. Parikh is going to talk a lot more about it. But from where we are sitting in, we're looking at the Indian real estate market. Perhaps will touch nearly $1 trillion by 2030 if the GDP contribution of this sector moves from 6%, which it stands today, to about 13% by 2030, which is where we think it is likely to be. The initial fear and pessimism that was there when the pandemic hit, has now gone away, and there does appear to be more resilience that's coming up. Lots of new trends that we have seen which demonstrate the resilience. We had, the IPOs of Macrotech, which is Lodha, that launched. We've had Shriram Properties IPOs. We've had very large-scale market activity on the residential sector. 2021 as a calendar year in the top 7 cities nearly reached pre-COVID levels of both sales and new launches. Mumbai MMR has depicted absolutely phenomenal action. Lots of consolidation as a theme that we are seeing. The organized players, who have the willingness and the financial muscle, they're being able to consolidate. The weaker players, they're being able to drive the activity in these sort of uncertain times for the weaker players. Clearly, COVID has also moved a lot in the real estate to adopt technology. Prop tech is really moving forward. The media spends are beginning to change. The trends are changing. In the last 1 year, we've seen a lot more focus on digital. There's a lot of questions that are being asked is, are the offices here to stay? We're going to have that discussion today and tomorrow. Everyone has certainly realized that remote working may not be the long-term solution. So, in our opinion, offices are here to stay. In addition, this work from home has created many opportunities. Are the smaller homes going to become bigger? How the sort of larger family size is going to adjust, et cetera, et cetera. Are the smaller cities going to rise? The tier 2, tier 3 cities, are they sort of expected to gain prominence because a lot of people have gone back to their hometowns, and we are going to see them continuing to be there. We're also seeing a lot of deleveraging of the balance sheets of the developers. Large developers have been able to improve their balance sheet. If you look at the listed realty companies, they have shed in the last 18 months nearly 37% of their debt. Fortunately, this time around, we have seen that the developers have been judicious in controlling the price rise. Unlike in the past, when the prices were on an upswing, that encouraged speculators. This time, prices have largely been range bound between 5 to 10%. Hopefully, that will continue to stay. We're seeing a lot of millennials, who are buying. Clearly, they used to rent. They are now moving into buying. When I met up with the larger listed real estate companies, they're expecting January to March 2020 to be the best ever quarter for the sales bookings. That is amazing, the confidence that these players are showing. We're also starting to see the commercial office net absorption move. Demand as the Omicron recedes on the office is likely to further increase. Large companies, the IT giants, have started to call back their employees, and they're starting to now ask for new office spaces. This morning in the Economic Times, there was a beautiful article which said is that amidst the rise in footfalls, there's a recovery in the malls across various cities. The mall developers have started to charge full rentals. The era of concession has coming to an end. And finally, we're seeing a fair amount of institutional investors, global funds, private equity funds, even the domestic funds, who are investing in real estate. So more and more funds will continue to flow into this sector. HDFC is a big proponent of this. They have continued to raise a lot of domestic, international money to be invested in the real estate segment. So our thought is that it is an interesting time from where we are and where the next 4 to 5 years within the Indian real estate industry are earmarked. I have an absolute pleasure in inviting Mr. Deepak Parekh, who's going to be talking a lot more on what is in store for the Indian real estate. Mr. Parekh has already been introduced, but sir, I do want to say 1 or 2 minutes about you. It's an absolute pleasure and an honor to welcome a legend like you. Truly, you actually don't need any introduction. The way that you have transformed various businesses. I mean, I felt 2 words, which I had read many, many years ago about you, really, really fit you beautifully. And they were that you have made correctness and clean business the cornerstone of business success. Correctness and clean business. And so this is what we required within the real estate. And these were the 2 cornerstones of the business successes which you propagated. We're all excited to hear your talk about, how the Indian real estate industry is going to contribute towards the economy. We're hoping that the economy does touch $5 trillion by 2025, and how real estate is going to, play a role. Also, is the worst behind us for the real estate in India? Or are there further challenges that we think that we are going to see over the next decade or so? And any message that you think that we should pass on to the various stakeholders who are watching this through YouTube or through this Zoom, that you feel that they should be aware, which can be a party pooper, would be very interesting, sir. So all over to you, Mr. Parekh.
Thank you, Anuj Puri, for the kind words. Mr. Tyagarajan, Mr. Anuj Puri, Mr. Rakesh Junjunwala, the CII Secretariat, ladies and gentlemen. Good afternoon and thank you for inviting me today for the 4th edition of the CII Real Estate Conclave. Much as I wish I was personally meeting all of you here today, the virtual world has become our new reality. After nearly 24 grueling months of the pandemic, there is now a greater confidence of coexisting with the virus and optimism of a return to near normalcy. Let us hope it stays this way. Yet, there have been invaluable lessons learned during the pandemic. The importance of agility, the importance of resilience, and the importance of prudence stand out as key learnings. If we were to look back at the start of the pandemic, at that time, some segments of our real estate sector were already reeling from the NBFC-driven liquidity crisis. Reflecting on the state of the housing and real estate sector today, to my mind, this sector has demonstrated remarkable resilience. The stronger players in the real estate sector have increased their market share. There has been greater consolidation, which was much needed. Deleveraging has happened across most of corporate India, including many of the real estate companies. Endeavors of asset monetization have worked well. Unsold inventory levels have come down. And niche and stretched asset funds are seeing increasing opportunities in India, and in recent regulations by the capital market regulator on the special situation funds too are favorable towards this end. Yet, just as we feel that the threat of the virus is receding, globally there have been many significant shifts in the overall macroeconomic landscape. Say, for instance, in 22, all global forecasts point towards a distinct slowdown in global growth. The lower forecasts are led by slowing of the world's two largest economies, US and China. GDP of advanced economies are projected to decline from 5% in 21 to 3.9% in 22. While emerging markets are also projected to chart a downward trajectory of 6.5% in 21 to 4.8% in 22. However, fortunately, we in India continue to stand out as being amongst the fastest growing major economies. Yet India is not decoupled from the events unfolding in the global environment. As you all know, major central banks have repeatedly articulated a gradual unwinding of their stimulus measures. There has been a sharp upswing in the commodity market cycle, leading to higher input costs across the board. There is a shift in the narrative that rising inflation is no longer transitory, but getting more entrenched. And of course, there remain concerns of the future actions of the Fed, increases in interest rates, and uncertainty of this impact on emerging markets. As a result, equity markets across the globe have turned edgy and bond yields have moved up. This has been compounded by geopolitical tensions as well. One agrees there's a change in the tide, But haven't we all seen such market cycles before? I personally don't think there's any reason whatsoever for panic. Let me now shift focus to the housing sector. 3 months ago, on a public platform, I had said that in my over 50 years of work life, I have not seen housing affordability better than where it is today. I have not seen such easy liquidity conditions and interest rate at such low levels ever before. And I have not seen such a burning desire to be a homeowner than in these current times. So I continue to maintain this stance even today. Yet India stands in a bit of a different position. This is not to imply at all that India doesn't have its own sets of challenges. But in several Western countries, one has seen housing prices run up during the pandemic. If you see England, London, if you see Canada, Australia, a lot of these countries, Western countries, real estate prices during the pandemic have gone sky high. Part of their problem was that new supply has not kept pace. And a large number of housing transactions were purely investment or speculative driven, which led to a spiraling of prices, leaving out those who genuinely need homes to live in. Take, for instance, the example of China. On the other hand, China continues to battle with issues of oversupply and over-leveraged developers, even though now the regulators have started easing restrictions to encourage banks to lend more to developers and speed up the mortgage approvals. China, through its common prosperity agenda, is now placing affordable housing and public rental housing as its core focus, rather than luxury housing seen earlier. Yet, its housing markets are still overheated in China. Let us look at India. In comparison, in India, the demand for housing has come from genuine home buyers, not speculators. Home prices have stayed fairly stable. Low interest rates have helped. And the real estate sector has already self-corrected and recovered from its previous down cycle. Peaks and troughs of each housing market cycle, if you analyze typically, entails a duration of 6 to 8 years. So in short, the Indian real estate market is on an upward cycle, which bodes well for all of us. The big star of the real estate sector continues to remain residential housing in India. I hardly need to reiterate that demand for housing in India continues to remain extremely robust. The greatest mark of confidence has been the strong pipeline of new launches surpassing pre-pandemic levels. The demand for housing continues to be from both the first-time homeowners as well as those moving up the property ladder, generally into larger homes or houses, other locations. Yesterday, I was delighted to receive ANAROCK's report titled India Residential Real Estate, Staging a Strong Comeback. I'd say we've already staged a strong comeback, and from here on, we will get even stronger. But at this juncture, given that the macro landscape is changing, let me preempt a few questions that may be on the mind of many and share some of my views. Now, these are some of the questions that are constantly asked to me by builders, developers, lenders, and practitioners, and even individual borrowers. Many people are asking that has India seen housing affordability at its best, and whether going forward, housing affordability could get impacted or would get impacted. So my answer to this is unequivocally no. The demand for housing continues to be very strong. simply because the desire to own a home is so immense and there continues to be a huge housing shortage in India. The mortgage to GDP ratio in India is at 11%. It's still very, very low. If one looks at the cohort of those working in sectors like IT, e-commerce, professional services, financial sector, or those working even in large companies, or the breed of new age entrepreneurs, income levels have risen. There's no doubt about that. In India, as income levels rise, one will see younger people being able to afford housing sooner in life. The trend I'm seeing is that incomes are rising faster than real estate prices, and therefore affordability should not get impacted. The second question I get constantly asked on everyone's mind is, will house prices increase from here on? So before I respond, let me add a caveat here. Most developers normally would get quite upset when I would share my views of housing prices. But that was a time when many developers refused to get a reality check and recognize that their price points were not viable. And that's why they ended up with unduly large unsold inventories. I hope we have now overcome these issues. So here is where it is important to segment the market. In high-end premium projects, one has already seen a price rise of 15 to 20%. But it is important to understand that this is not the case across the board. Barring a few metro cities, prices in the affordable housing segment have been absolutely stable. The sweet spot for housing is still in the price range of 5 million to 10 million rupees. An encouraging trend is that there is now greater confidence to once again opt for under construction properties, at least with those developers who have a strong track record of delivering projects on time, as opposed to only a preference for ready to move in properties. So even if certain pockets across the country witness a small price uptick, this can be easily absorbed. What one needs to closely watch out is if there's a continued rise in the costs of building materials like steel, cement, labor, which could get passed on to the home buyer. There are measures that can lessen this impact, such as facilitating shorter construction cycles, faster approvals from the regulatory authority, and enabling credit input on goods and services tax for under construction properties. This would help the affordable housing projects. The last question that I'll ask myself and which people ask me is whether home loans would be impacted if interests were to rise. Clearly, we are at the bottom of the interest rate cycle. But there's sufficient confidence in the central bank, the Reserve Bank, that any increases in interest rates, if at all, from here on will be calibrated and non-disruptive. These were words of the RBI governor. RBI has articulated that growth will continue to remain a priority. And RBI has also indicated that despite inflation currently being at the upper band of its target range, it will be manageable, and the RBI at this juncture envisages some easing of prices going forward. Further, it is important to understand that a housing loan is a long-term loan. Over this period, interest rate cycles may move up and down. A customer who wants a home will not hold back because interest rates inch up slightly. The government has continued with the tax incentives on home loans, which also helps reduce the effective rate paid on a home loan. The reason why this concern has arisen is that since banks have moved to the external benchmark or repo-linked loans, there hasn't been an upward increase in the benchmark policy rate so far. But rest assured, this will not be a dampener for home loans. Do remember, we have seen home loan rates as high as 17 and 18% in the past. Today, interest rates are still at historic lows. So minor increase is not going to have an impact at all on the demand for home loans. Let me briefly turn to the commercial real estate sector. The jury is still out on the workspace. Work from home, return to work, or having a flexible work model going forward. All these three options may coexist. Yet, the broader point is, whatever be the chosen option, it still remains a positive for real estate sector. I have not heard of any large offices having given up their commercial premises so far. In fact, fresh supply of office space, as you heard Tyagarajan say, across the major metro cities is expected to be in the region of 45 million square feet this year. An estimated quarter of this supply is already pre-leased. This is, of course, largely stemming from the IT, e-commerce, and startups and professional services space. Again, as house prices have been stable, rentals have also so far been fairly stable. But there could be a slight uptake in certain premium projects. We in India have long been recognized as the back office of the world. Today, riding on the back of India's strong IT capabilities, new real estate opportunities are emerging, which is growing demand for, say, data centers. India is positioning itself as a data center hub. This not only is an opportunity that many large developers are capitalizing on, but it is also going to generate thousands of new jobs. And there is going to be a huge premium for such talent. Data centers, as you all know, are of strategic importance. Even in the budget this year, data centers have now been accorded infrastructure status. So therefore, this in turn would facilitate more access of credit to the data centers at more favorable terms. Another area that has been growing rapidly is the warehousing and logistics segment. And demand for this is by boom in e-commerce and logistics business. 46 million square feet of tech-driven warehousing space is expected to be developed in the next financial year. And this represents a 2-year CAGR of over 20%. Demand for modern warehousing facilities will receive a shot in the arm following the union budget announcement of setting up multimodal logistics parks along with urban transportation infrastructure. This will further give a boost to the logistics sector across the country. I never tire of saying that when India builds, India grows. The country needs many, many more EPC companies. Strong ones, and clearly much work is still needed to ensure that we have a more efficient and time-bound dispute resolution mechanism. Delayed payments play havoc with the entire chain of suppliers. So in line with the theme of this session, which is what is staying and what is changing, undisputedly, what is staying is India's strong demand for housing. What is changing within the real estate landscape, there are two key trends emerging. The first is PropTech, which is changing the real estate landscape. Construction technology is at an exciting juncture with 3D printing, building information modeling, precast construction technologies, amongst others. Don't underestimate the power of India's startups. And even home improvement technologies are going to see a lot more innovation going forward. So keep up with the emerging tech. The second aspect calls for increased focus is ESG. All incremental funding to financial institutions is per force going to have ESG governance embedded in it. So it is important that construction sector in India stays ahead of the curve, especially on working towards a lower carbon footprint and reduced emissions. The sector has to be able to demonstrate greater efforts towards increasing the stock of green buildings. Lastly, to my mind, as far as Maharashtra is concerned, I do believe there is merit in continuing with a reduced charge on premiums. As far as recommendation of the 50% reduction in premiums on building approvals is concerned, this clearly reflects the need for a structural change from a long-term policy perspective. High premiums hamper development. Let me repeat, high premiums hamper development. It is a win-win for all because as the municipality that would normally earn 30 to 40 billion in premiums rupees will likely to earn up to 160 billion in terms of revenue collection due to the discount in premium. These are all Maharashtra numbers. So I hope the state governments take note of this. To conclude, I'm confident that the real estate sector in India will see even better days ahead than what we have seen ever so far. Just remember, there is no substitute for prudence and no allowance for excessive greed. Your reputation and your track record of timely delivery is what will ensure a long-term sustainable business ahead. Thank you, Anuj, once again.
Thank you, sir. Thank you. This is fantastic. Thank you for your encouraging remarks, opening remarks, pertaining to both India and the real estate sector. And, it is interesting, sir. I have not seen the moment you started, I had loads of questions coming on my screen. And, those questions, as they were coming up, were being responded by you, whether it was about home prices, whether it was about home loans, whether it was about affordability, whether it was about the long-term growth story of the Indian real estate. So it is, fantastic how you position and how the questions were continuing to roll on. There are still a lot of questions, sir, which are there. If I can take the liberty of asking you 2 or 3 questions out of the list that is there. We also have Mr. Rakesh Junjunwala with us, who was also patiently listening to what you had to say, Mr. Parekh. The question, I'll pick up 2 or 3. The first one, which I really enjoyed reading, was in your recent interview, and it was nicer that you said, is that in your 50 years, you've never seen, home affordability, easy liquidity, and burning desire. I love those 3 phrases that you put it up. The question is, in your recent interview, you mentioned that there is a lot of optimism in the air for Indian real estate. Do you see this optimism in only metros or even the tier 2 and tier 3 cities?
No, I would go ahead and say that we see a lot of traction in tier 3 and tier 4 cities also. But supply has to be there. How do we encourage our developers who only want to concentrate on larger cities to start something in a tier 3, tier 4 city? It would sell far faster, far quicker than urban areas because the need is more acute and the options are very limited. But somehow we've not got strong developers in those cities. And that's the reason why housing remains such a big issue in those smaller cities.
Completely agree, sir. Sir, is there a possibility of rental housing coming in, given the rising in housing demand in the metro cities?
See, we had asked one of the agencies, Money Control, to work on housing rental. Why is it not popular in India and why is it popular all over the world? They've recently come out with an excellent report on what needs to be done by the center, by the state, by all of us to encourage rental housing. Because that's the only way the younger generation of people who have limited savings or no savings when they start off their career, they can pay rent, they have cash flow, but they don't have upfront money to book 10, 20%, 30% of the cost of a house. So we all have to work towards making rental housing a dream, a possibility in India. The scope is enormous. And I'm delighted to say that there are one or two companies, international companies, who are very big in rental overseas, are now looking at projects with us to look at a housing, a project for rental purposes. And these are big global funds. And so I think it will be useful for India and rental. And you should get a copy of the report, Anuj, and have a look at it.
So last question that I will ask, which is an interesting one. Do you see any path towards convergence of rental yield and mortgage rates for residential properties?
It's totally out of whack. If you own a property, if you own a property, you'll get a 1 or 2% rental yield. And so most people just keep it locked. You should get a certain amount of yield. Otherwise, why give it a 2%, 3% yield? It's not so in commercial real estate, but it's definitely in residential real estate. And therefore, many people buy homes for retirement and just keep it locked. Because what's the point? You know, the rental amount doesn't even cover the taxes and the society charges. So I know many people who just kept their houses locked. So there is something structural change which needs to happen. And anyway, Anuj, I can see my friend and the most popular and most famous person of India, Rakesh Ji, sitting there. Everyone must be waiting eagerly to hear him. So I will slip off and let you have Rakesh full time.
Thank you very much, sir. It was absolutely a delight and a pleasure to have
Rakesh,
you.
good to see you.
Sparing your time. And
Rakesh, good to see you.
Thank you very much.
पहले तो हम दीपक भाई का blessings. We are what we are with the grace of God and the blessing of it. So we always seek the blessings of a man who has been such a big institution builder. Right? And his wise words, I was also listening to it. And I think we're in the throes of, I don't joke, Deepak bhai, I'm not saying it for the sake of saying it. But in our Hindu culture, the blessing of elders is all. And of a wise man, an institution builder like you, we would always like to seek your blessings.
You have done very well. You have done very well.
yeah. Rakesh ji, Mr. Parekh is absolutely bullish on the Indian real estate. And he said in his 50 years, he's not seen.
And the capital market, and the capital market.
And the capital market, and the guru of capital market.
No, sir, it's not a question of the Indian stock market, Indian bull market. I could be wrong, but I don't think people are able to understand the implication of what is changing in India.
That's right.
See, if you look at history, it's a process, it's a chemistry. And if you look at all prosperous societies, they carry two essential qualities: skilled and hardworking people and a democracy. And we have both in abundance. It is only a tryst with socialism, with all due respect to Nehruji, that it has taken so many years for us to reach where we are. India needs nothing, a platform, the ease of doing business. And the way our society is getting digitized. And that skill does not belong to you, me, it belongs to every Indian. And today you people criticize, my servant has got a bank account. I could get a passport for him because he has got an Aadhaar card. I did so much business in the last 2 years from home.
When you have to.
So I don't think people are, and this change is going to accentuate with every passing year. And we have a government which does not believe in socialism and capitalism, it is believing in that. In the presentation I made to the Prime Minister, I said, India ka time aayega nahi, aa gaya hai. And I project, I'm telling you, 25 or 26, we are going to grow 10%.
Wow.
There's no question of, so you're talking of housing, 50 lakh employees, the software industry is going to take over the next 5 years. You have a market for 50 lakh houses. And with the development of metros, if you go to London, wherever you go, wherever the metro goes, housing has developed. So, Bombay is making 340 kilometers of metro. And it's being made in every, so that as the transport systems come, the potentiality for housing is going to go through the roof. Your cities are going to get decongested. And urbanization in India is today half of China, 45%. As urbanization comes, housing has to come.
Yeah, absolutely. I know, Mr. Parekh.
People call me a big bull. I tell them bulls are called bulls because they are big. What is big bull?
I was going to refer to you as the big bull. I will now not refer to you. Mr. Parekh, thank you, sir. You're most welcome to stay. I know you have to leave, but thank you very much once again for taking out the time and giving us your knowledge and setting the tone for the next couple of days.
Okay, good. Thank you.
Thank you, sir. I have the pleasure of introducing Rakeshji. We did a formal introduction, but I just wanted to do a very quick introduction. I'm very, very excited once again to have this chat with the fiery Mr. Rakesh Junjunwala, who we all call India's own Warren Buffett. He's truly the investor with the Midas touch and a stock market king. And today I'm going to ask him where he sees the Indian real estate in the next 5 years. Rakeshji, I've made some 5 questions, just very small little 5 questions to ask you.
Mr. Puri, first of all, let me correct you that the stock market has no kings. Anybody thought that you would like to be a king landed in Arthur Road jail. So the market is the only king. And markets are like women, always commanding, always mistress, always uncertain, always volatile. And you can never really dominate a woman. Right? So you cannot dominate markets. Whether death, markets and women, you can't predict. You're big. Anyway.
My first one is, how do you read this turnaround in the real estate, sir? Do you believe that the worst is over for the Indian residential sector?
Well, it's linked to the Indian economy. And any cycle, we have prices peaked about 10 years. Right? And this has been there has been a lot of changes in the real estate sector. In the sense, consolidation is apparent.
Correct.
There is going to be clear distinction between the landowner and the landowner. Making good flats or even affordable flats and selling them is a skill. It cannot be that I'm a jeweler and I have a lot of liquidity, so I buy land. I may buy the land, but I will get it developed by a developer. Third thing I think is that, what ails this sector is the amount of time it takes to realize your asset. If you go to any builder, any developer, he will say, I've got 1 lakh square feet and the rate is 30,000. So my property is worth 3,000 crores. And I paid 700 crores for the land and 700 crores is the cost of construction. And first they assume that cost of construction will come from the buyer. Right? But the fact is that if you look at the balance sheet of all the whether it's DLF, whether it's Oberoi, whatever publicly available balance sheet, the return on capital is not more than 6-7%. And now I think with RERA, people are going to be far more responsible. And I also think that with consolidation, the amount of corruption and government collaboration will come down. So I think if India is to develop, the real estate sector has to develop.
Has to develop. I agree with that.
But it is the only business in which the developer is not concerned about the cost of construction. See, if I sell a flat in South Bombay at 1 lakh rupees a square feet, cost of construction may not matter.
10,000.
But when I'm selling at 7,000 rupees a square feet, I think there has to be concentration on affordable housing. There has to be concentration on cost of road development. And the development of metros will give us a lot of land available. I also feel one thing, that the government of India has to make effort like in America, where you digitize all the land records and the certification of the title is done digitally. I'm told in America,
Yes,
you can
which is
go
correct.
because in a lot of places, especially Christian and Muslim land, there is, because of the peculiar laws of succession, there is a lot of problems.
I agree. So there were very two successful listings done, new listings, Lodha, Macrotech, and then Shriram Properties. What we understand from the market is that over the next couple of quarters, we're going to have 4 or 5 more listings coming up. Are you a big supporter of the new developers getting listed publicly?
Well, if I was a developer, I won't list.
Actually, you would not list.
Because it's not a business which is susceptible to list.
Because the stability of revenue.
And although the rates have now gone up, but the experience of people, they went to 1,300, then went to 80 rupees. So but I think good property people, large companies like Lodha, like DLF, who have large portfolios, should surely. But I don't understand what is the purpose of listing. Is it raising of capital, or is it raising of having succession, or? But what I think is, if you want to, you got to have size to list. You must ask Mr. Ravi Raj, he lists his hotels. Why doesn't he list his construction company?
What does he say, sir?
Pardon?
What does he say? Why does he not list his development company?
No, I didn't ask him.
But my understanding is that most of these are wanting to list it because they are wanting equity to come in, and so that they can go out and buy land.
No, but Anuj, the question is, as an entrepreneur, I treat others' money as free money, and where is the return on capital? Today, all blue chips have return on capital between 18 and 25%. Your return on capital is 6-7%. So you got to take steps to accentuate that return. Up till now, the real estate company only burnt capital.
Understood. Absolutely. Sir, are you a supporter of the REIT listings?
I think there is great scope there. It's going to be a very big asset class. Because, I want to have rental income now. I can't organize a place, buy a rental from, we go buy it. And it is going to be an asset class by itself. Even for middle class people, upper middle class people, it's a big source of investment. I think rather than list my company, I would list the REITs.
Understood. Because the stability of income is there, the predictability of revenue is there.
And I'm very bullish on commercial real estate. Because if the Indian software industry is to grow 75% in the next 5 years, it's at least 50% of existing space occupied is needed.
Absolutely.
And I have no doubt that all these knowledge-based industries, whether it is software, pharma research, all of them are going to grow in it.
So just like in airline industry, it is very competitive and fraught with challenges, and yet you have gone ahead and launched an ultra low cost airline. I just wanted to ask, what led to this decision?
Well, I was telling Mr. Chandra that you are investing 18,000 crores in Air India, and we are investing $50 million in Akasa. I said, I hope I'm not living in a pipe dream. Then Rakesh will come and learn from me how you're doing it. But I think I have got a business plan. And, Ryanair was profitable from day one when 10 European national airlines have closed down. So we have a game plan. I think aviation market in India is far going to grow from where it is today. And in an industry where everybody is losing money, pricing has to improve. I think I've got a fantastic team. You cannot believe how I incentivize them.
Yes.
And see, I won't call it ultra low cost, I'll say frugality.
Frugality.
Right? And see, frugality is also a culture. Right? So we have to build that culture from day one.
Very true. Very true.
Anuj, others are happy that he is there in airline because it will definitely turn profitable with his Midas touch.
I'm not, I have a lot of people question why I started an airline. Rather than answer them, I said, I'm prepared for failure. It's better to have tried and failed than not tried at all. And today, the 80,000 crore is a market cap of Indigo. At least 50% of my top management is ex-Indigo. Right? So they bring the skill what Indigo was. Second thing is I am investing personally 275 crores. Right? The risk-reward ratio, if my airline can be a 10,000 crore market cap, and we have ordered 1/4 of the planes which Indigo has. That order is sealed and delivered. So, Umeed par duniya kayam hai, and it's not that I bet my life on it or I've pocketed my wife's jewelry and done it. I've done it with my own money. So let us see. I am surprised at the way people are surprised. But I only tell them that, when I came to the stock market from a conservative Marwadi family, my mother said, who will marry you? Right? And everybody thought I'll fail and I'll have to take up a job. But I proved them wrong. So I hope to prove people wrong. Now it's not a matter of ego.
Sir, you have done so in several sectors on several occasions. So you will definitely change the face of Indian airline industry.
No, I will not change. See, Mr. Tyagarajan, never forget that we invest with informed ignorance. Because I invest in a jewelry company, I invest in a software company, I invest in a car vehicle company, I invest in a truck company, I invest in so many different. I can't know any businesses completely. And because that which is listed, the amount of information that can flow to me is limited. So therefore, we must realize that we invest in a future, that future is uncertain. We can only model it to a level. So the wisdom tells us, boss, you have to try and fathom the future and then wait for it. कल किसने देखा है भगवान के अलावा किसने? So I don't claim that I know. I don't. There is much known, but much. But luck favors the brave. That much I can say. And I've got guts, balls of steel. That much also.
So can we expect Mr. Jhunjhunwala to enter the real estate space on the civil lines as that you've entered the aviation in the near future?
बोलते हैं ना किसकी किस्मत नहीं चलती है. आपको कोई प्रोजेक्ट और मुझे पार्टनर लोगे तो प्रोजेक्ट डूब जाए. I invested in 4-5 projects, but I made money in none. And then I want to limit my activity also now. So it's not likely. I may build some partnership with some friends for renting out. No, I don't know at this stage.
So you are a role model for millions of people, millions and millions of people. I want to ask you today is who's your role model and where do you draw your inspiration from?
Well, the first role model from my life is my father. Second is the house of Tatas.
Nice.
Third, what better thing can you do in life to, earn wealth and use it for the good of society? I mean, Mr. Jamshedji Tata, Mr. Dorabji Tata sold off the Option Diamond to make the Tata Memorial Hospital.
That's right.
Then, at age of 62, you realize that the average age in India is 70. You have finite life. You think of life beyond life. So then you feel what is the best, what purpose have you earned? So I think first my father gave me my morals, my thoughts, my guts, encouraged my curiosity. Second is also taught us, I think for tenacity and sheer guts, I think Churchill. For the tenacity with which he saved the world in the Second World War. And for trading, I would say George Soros. For investing and for wisdom, Mr. Radhakrishnan. I think for wisdom.
Wow. Wow. And these are the people that you draw the inspiration as well from.
Yeah, inspiration, I really don't know, because I think there is much learned, but still much more to be learned. So the process to learn is a journey, not a destination. I would say inspiration, I don't know. I don't accept any guru and I don't accept any Swamiji and all that. I learn by doing an experience.
And my last two questions on the Indian real estate, sir, what can go wrong possibly?
I think a recession in the Indian economy.
That is true. Absolutely. Because we are really piggybacking on the economy. If the economy goes haywire, then obviously real estate will have trouble.
Right.
And
so that it is linked, it is essentially linked to urbanization and the growth of the economy. See, everybody wants to have a house. I mean, today I bought a house in 2006, 2005. I sold shares of CRISIL. If I had not sold the shares of CRISIL, that house is worth 45 crores. I bought for 27. I would have had 1,000 crore additional investment. But our psyche is we must own a house. Right? I also have that psyche that we have a house. And second thing is, you were talking about this rental for residential. I don't think it's really practical in it. Because the difference in interest rates is so great. At 6% yield, I don't think anybody can afford rental income except foreigners.
There is a specific question that has been asked is, do you see appetite for mid-sized real estate companies in capital markets?
Come again?
Do you see appetite for mid-sized real estate companies in capital markets? This is a question that people have, so one of the viewers has specifically said, can you please ask Mr. Rakesh Junjunwala?
It can be, see, but you got to examine, remember one thing, that the costliest form of finance is equity. And remember one thing, your equity shareholders are partners. Why are you inviting them?
Mm-hmm.
If you're thinking, I want to just raise capital and then bye-bye, see, because wealth also has a purpose. If you take investors' money and treat it lightly, what self-respect will you have? At the end of the day, you're going to ask yourself, no, what have I achieved in life? And the biggest thing you can achieve is respect, regard.
Absolutely.
So you have to be very conscious of the capital you raise, the purpose for it is you're raising, and what kind of return you can get on that.
So one other question is, are you bullish on the warehousing and industrial sector?
Very bullish on warehousing. Very bullish.
And that's reason is, sir, because of Make in India, e-commerce, all that.
No, because warehousing in India is still at a very initial stage.
Yes.
And storage will be needed. And a lot of companies now don't want to give the storage responsibility to the logistics provider.
So my last question on that. You're a big fan of Bollywood.
Yeah.
And I've seen that as well. Is there a character that you relate to in Bollywood?
Director.
Character. Is there an actor character that you relate to in Bollywood?
Not that I really recognize. Not any character in any movie I've seen who's.
Right. This is again a question that is being asked here.
Well, if they want to relate me to some character, I don't mind hearing.
One last request, sir, somebody is asking is that what's your views on co-working spaces?
I mean, they will survive if somebody wants to have after a permanent office. See, I think someone who has 50 employees, 30 employees can have a co-working space. Because so many things are involved. I mean, I'm not personally very bullish. I could be wrong. Not that I have some idea or some great study of it. But off the cuff, I'm not very bullish. I'm not going to have 5,000 employees in a co-working space.
Yeah, I agree with you completely.
And a lot of companies are very secretive about their offices and Excel.
And finally, sir, your words of advice to the developers who are here. We have a number of developers, who are watching this.
Never forget your word is your bond. And don't promise people what you can't fulfill.
Don't promise people what you can't fulfill, Mr. Bhuvanarari. That's what Mr. Junjunwala is saying is
wise words, wise words.
Very wise words. Absolutely. Don't promise what you can't fulfill.
No. What will happen is that if you are responsible, in time you'll get a premium price. See, growth is a process and it has many ingredients. Right? And reputation, timely delivery, good quality, it will compensate you with higher, better prices.
Growth is a process and what were your words? Very, very, very well said.
Growth is a process. Timely delivery, quality. Right? Will give you a reputation which will give you premium price. But one thing I wonder that, or I told Mr. Rajesh Singh also, why don't all these developers go into big affordable houses? See, today development is nothing but land speculation and your ability to get access. Right? I don't know, worldwide also, people are not really able to, I've not heard of any big developer of affordable housing. I think that's where India's real opportunity.
So there's one developer here, Mr. Pradeep Agarwala. He runs a company called Signature Global in NCR. The biggest affordable housing person.
Right.
Really.
He should list.
He's listing. In the next 4 or 5 months, he'll be listing.
No, because there, margin may be 6-7%, but volume is there, no? And question, what is the return? See, any company whose return on capital is between 18 and 20%, and whose cash flows are 80% of profit, he's quoted at 25 times earnings. I'm talking of sustainable.
Yes.
So, in affordable housing, I can turn around a project in 2 years. So even if my earning on the capital is 30% of what I invested, I get a 15% return.
Right.
And Manisha, your answer also Rakesh ji has given. Manisha Natarajan sir, whom you know well, she's also asked this question. Would you invest in a company doing only affordable housing, even if the margin are as low as 7 to 8%?
So what is the volume and what is the return on capital? And what is the potentiality?
Absolutely, sir.
I want to only conclude with telling you that in 2010, they said, always buy land. Mark Twain said you can't produce more land. In 2018, they said never buy land. Right? So these are the extremes that people I mean, I got bullish in 2017, 18. It's taken time. But I think the real estate sector is in for a very good time. And the consolidation is really going to help.
Sir, if you are bullish on the real estate sector, I can tell you it will do exceptionally well.
I hope, sir, I hope I'm right. Pray I'm right.
Going by his past record, we can all write it to the bank only.
So because if there is prosperity in India, the first thing you want to buy is a house. And I don't see this 6.5% loans which we are getting today. I think 7.5%, 8% will be maximum. No, because they see the banks have an advantage that they get a customer for 20 years. And defaults in housing loans is very, very low. And I think real estate developers are all going to get money at 10, 11%. Good ones.
Thank you, sir. Thank you very much for your time. We're always blessed.
Thank you. Thank you so much.
Always blessed. You take out the time and come and address.
Any time, yeah.
No. Very, very kind. You've got Pradeep Agarwal, sir, from Signature Global. You have Baman Rustamji, whom you would know well.
Yeah.
There's Shriram Properties as well, Murli, who has just got listed a couple of quarters ago from Shriram Properties, based out of Bangalore. And then Manisha Natarajan is going to follow up from your session.
Okay. Thank you so much.
Thank you, sir. Thank you very much. God bless you.
God bless.
Thank you.
So thanks, a lot of thanks to all the visionary leaders who have presented their thoughts with us today here. And with that, I would like to announce the digital launch of the Consumer Sentiments Survey report by CII and ANAROCK. Can we have the launch? Now, I would like to call upon Mr. Prashant Thakur, Head Research ANAROCK, to give us a little key findings with regards to the report. Mr. Prashant Thakur, over to you.
Thank you, Pushkar. And what a pleasure to hear out all this industry stalwarts. I think much has been already said about how the sector has bounced back by Deepak Parikh sir and as well as Mr. Junjunwala. We all agree that the recovery that we are seeing is kind of quite robust, and yet it hinges on what other consumers are thinking about this recovery. So through this sentiment survey report, what we did was a basic dipstick analysis that we did. We spoke to real buyers and tried to find out how the buying decision has changed over a period of time since the time the pandemic struck. So quickly, top 10 key findings that we kind of covered in this report. Next slide, please. So this slide basically, reiterates the fact that real estate as well as stock market has made a strong comeback. If you look at, how the respondents have answered. So 57% of the respondent believe that real estate is going to be the best preferred investment class, followed by stock market. Now, if you look at how gold and fixed deposit are now being perceived, if you look at the numbers, they are 7% and 2% respectively. But if you go back during the peak of pandemic, it was 18% and 9%. So clearly the buyers were kind of, taking a conservative view. And with pandemic receding, I think the risk appetite has also kind of gone up. And that's how you see, the last two defensive investment in terms of gold and fixed deposit have gone down, while people are more bullish on residential real estate as well as stock market. Next slide. So this is an interesting slide. What we did was during the first wave, we spoke to the respondents, and 12% of the people said that, we didn't intend to buy real estate, but during this pandemic, we are, willing to buy it right now. That number has gone to 63% now. So what it conveys, it basically conveys that people who are not sure of buying real estate now believe that during the tough times, the need of physical asset is kind of, not going anywhere, and, they need a roof over head in terms of a long duration stable asset. So that's how you see the number has gone from 12% to 63%, which I think is kind of quite heartening for the industry as well. Next slide. Now, this slide basically talks about the mix of investors as well as end user in the market. The good part is that, we see a healthy mix of end user as well as long-term investor coming back to the market. I think which bodes well for the long-term growth of the industry. If you look at, earlier cycles that we saw during 2003 to 7, the growth was primarily led by speculators, I would say. That kind of, broke the momentum. But, with the sector much more clean, grade A developers taking the center stage, and then, long-term investor coming back and a good mix of end user, I think this growth momentum has a long road ahead. Pushka, next slide. Now, this again, throws a meaningful insight that what a consumer is thinking. We have been saying that, ready to move in inventory is flying off the shelf. But what a notable trend that we noticed was that people are also warming up to the idea of buying a new launch. And that, is because of the underlying fact that the developers have really kind of, delivered a lot of, projects. The buyers are seeing execution and delivery. Grade A developers are kind of, actually going at length to ensure that in spite of supply chain disruption, they have kind of, ensured that what they're delivering is exactly what was promised. And that's the reason we are seeing some kind of confidence coming back in new launch project as well. Pushka, next slide. Now, the ticket size also, if you look at the ticket size, 16% of the respondent during the first wave were more inclined towards buying property size, ticket size in terms of 90 lakhs to 1.5 crore. That percentage has gone up to 26%. And one thing that we should notice that affordable, which is, less than 45 lakhs, the share has come down from 36% to 25%. So obviously, I think there is kind of, upgrade happening. And then there's still some kind of pain at the bottom of the pyramid. I think as the economy picks up, that also is kind of going to go away. And we'll see a good momentum in that price bracket as well. This basically captures in terms what the buyer is thinking in terms of the BHK split. So as expected, 44% of the buyers are more inclined towards buying 2 BHK, and 32% are in favor of buying a 3 BHK. Now, a lot has been said that the need for extra 0.5 is being felt after the pandemic. So we further kind of probed what the buyer was thinking and which segment is more inclined towards buying that 0.5. So if you look at the numbers, a person who was more, let's say, inclined towards buying 2 BHK, if kind of, nudged further, will be willing to buy a 2.5 BHK. Because if you look at 1 BHK and 2 BHK, that's where the person would need an additional space as compared to a 3 BHK. So clearly this kind of, shows a preference towards 2.5 BHK is higher across the segment. Pushka, next slide. Obviously, the peripheries are kind of becoming the next nerve center for growth. And because of various factors, obviously, infrastructure has kind of opened up and made a lot of areas that were non-accessible, more accessible. and plus this hybrid working model are also kind of helping the peripheries to gain its due. And what people are also doing is they are kind of more inclined towards more sustainable, open, and kind of environmental friendly living. And if you look at the way they are kind of asking for additional space, I think peripheries fit the bill, and we are seeing a lot of action on the peripheries. So this is, I think, one of the most crucial slide for all of us on the screen. What is the buyer thinking about the price hike? So I think buyers have also evolved. 56% of the respondents feel that the prices are going to increase in 2022. It's not that, they're not expecting that prices will not go up. But again, when asked about the range within which they will be comfortable, so below 10%, I think it's not going to impact their buying decision. It's, above 10%, and that too on the higher side is where the buyers will kind of, rethink, or let's say he'll have to kind of recalculate his budget. So I think with these key trends, I would hand it over back to you, Pushkar. Thanks.
So thank you. Thanks a lot, Prashant, for sharing the key findings of the CII ANAROCK Consumer Sentiment Report.